Hello and welcome to this spontaneous live session that I'm doing right now. I hope you guys can hear me out there. So if you guys want to press something in the chat saying that the sound is okay, I will appreciate it very much. Before we continue, but it should be okay. Sounds okay. Well, while somebody of you will try to answer that, I will try and continue a little bit. My voice is a little bit bad today, but I hope you can hear what I'm saying. And also, I have a problem with my eye, but I will try not to focus too much on that. Okay, today, spontaneous trading day, will be focusing primarily on three of the topics, which is the one bar stop rule, and then risk reward and targets. I've actually done some other um, videos about this, short videos, long videos about this. So please go check out my channel. You also like and subscribe if you like the content. But if you look at my channel, you can find these short videos or also long form videos about exactly about how I view risk reward and also about how I view targets. But today I'm going to dig a little bit deeper in this. Plus, I'm going to combine it with the one bar stop rule. So let's dig into it straight away. The one bar stop rule. Let me see if I can open up here my Microsoft whiteboard and share it with you guys. Let's see if I can do that. Here it is. Yeah. So let's do a new whiteboard. Here we go. So the one bar stop rule, which I actually prefer a lot, is actually a rule I have just, adopted by Oliver Velez. And I must say that the one bar stop rule is actually, regardless of what time frame you're trading on, even though if you're an investor or a long-term investor, I'm sure that you could have a significant improvement in your trading or investing if you actually apply the one bar stop rule. Let's see here. Can draw. Yeah, one bar. Here we go. So the one bar stop rule that Oliver has taught me is basically the rule that mathematically is going to put you in a profitable positions all the time, because he says that if you have your entry bar, I'll just write something here. Let's say this is a bullish elephant bar. If I have my entry in this bar at the close here, I put my stop underneath right there. So that means if I lose, if I'm wrong in the case I find the right entry for the right position, I will lose only one bar. But if I win, I'm going to win 2 bars, 3 bars, 5 bars, 10 bars, 15 bars, depending on how much the market is willing to give on that given pattern and on that given day. So that means that mathematically, you can never go wrong if you follow this one bar stop rule. Because if you start to adjust your stop and put it longer or something like that, then you're actually violating this rule that's going to give you some sort of consistency. So the one bar stop rules says that let's do the mathematics on this one. Maybe I can open my calculator here. I don't know if I can do it here for you guys to see. Yeah, you can see it here. Let's say that this bar here, because let's say this is an elephant bar, so it's a quite long bar. Let's say that this bar is $100. Okay, so that means I will lose $100 if I lose on that trade. But let's say I go in with an elephant bar on the right position and the right place, where there's about 70% likelihood there's going to be more follow through on the green bars. That means after this initial green bar, we have another one, another one, another one. That's 3 bars. It's quite normal that you can get 3 more bars after the initial elephant bar on the right spot, according to the MA20. I have discussed this in previous videos, live videos, so you can see it as well. And also in my long form instructional videos, I have also shown this. So if you get 3 bars more, this is bar 1. Sorry for my drawing. It's a little bit childish, I know. 3 bars more. That means if I lose 1 bar. But if I win, I can win often 3, 4, 5 bars. Then it maybe does a little bit of retracement and then it continues up. But the point is, if you take your money already here, you're getting 3 bars. But some of you might argue, say, well, that is technically mathematically perfect, but what is the problem? Because the elephant bar that you enter on could be $100 long, and the small ones up here are only, let's say, $50 or $75 long. Well, the mathematics still holds, because in this case, they could be, let's say, $150 worth or even $225. So if your hit rate is somewhere above 60 or 70%, you'll be fine, even though you will lose 1 bar. So, and ever since I have applied this 1 bar stop rule into my trading, I can clearly see how much it has, improved. And also, of course, when it comes to, let's see if I can erase this here, draw it a little bit better. Here we go. If we take the example that we have here, the first initial bar, then you get 2, maybe 3 small ones more, okay? Then you get some kind of retracement towards the 20 moving average, like here. And then you get another push of green, which means that your entry would be here, and then green, and then perhaps even more green. So that means not only here when you enter on the first bar and you take off on the third bar, you can enter often a second time here and then enter 3 bars later. So you can see now the mathematics goes even better, because your stop is down here. So whether you choose to add here or you just let the one from here running, it's up to you. It depends on how deep the retracement is here. But the 1 bar stop rule is really fantastic to use, and it doesn't matter which time frame you use it on. The mathematics will always be on your side. Let me try to show you a live example here, actually from the week that just passed. I'll close down this one here. Oh, I need to give a second to mention the platform I'm using. It's not really because I'm sponsored or anything, but it's just because I'm really happy about the platform. The platform that I use is TD365.com, and they offer fixed spreads. I mean, really, really good prices on spreads, where other brokers are basically ripping off their customers. They offer 200 to 1 leverage that you don't have to use if you're not going to use it. And they offer negative balance protection, so you cannot really owe your money to any broker. But the most important thing that I like about this broker actually is the single currency trading, because this is the only broker I have seen so far that actually offers single currency trading. And that means that from wherever currency you want to trade in, that's your whole platform. In this case, for me, since I'm Danish, all my amounts on my platform will be in Danish kroners. So that means if I want to buy the Dow index at 38,000, well, it's 38,000 Danish kroners instead of $38,000. And that means I don't have to do any calculations or exchanges or anything. And I don't have to do any currency trade all the time back and forth between Danish kroners and US dollars. So it's going to save me a lot of money in exchange. And some people don't really think about this, but I think it's really important. Okay, back to the chart. Let's see if I can get the chart over there so we can see that. Coming here. Here we go. And this is the Dow Jones index. And as you can see, this is actually from Friday, so it's very new. This is on the 15-minute chart. When I saw, maybe I can minimize this one, because these indicators is just something I have kind of like a relic for 16 years here. That one. I said, oh my God, it looks good. Well, because it went up to test the previous high area over here for closing price, but couldn't even get there. And seconds later, well, actually 15 minutes later, you have a red bar here that takes out completely 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 15, 16, 17 bars. 17 bars of price action in one sweep. So in 15 minutes, you took out the complete price action from this long back. So that, I mean, if you use the Fabulous 4 from Oliver Vedas or whatever you use, you could do like this, draw a line from either here from the last, let's do it again. draw a line here from, well, it keeps on getting gray. What's going on here? Just a second, guys. I will move it over here. Wait a second. These lines is gray, and I want them to be able to see it a little better. Let's do like this. There we go. Yeah. So you could draw in a line here, and you could draw in a line basically around here. So as soon as price leaves the fabulous 4 box, you can surely, in this case, with a 20 moving average pointing downwards, you can surely go short. But I wouldn't even wait for that, even though you could claim that this is, it's not inside the trap zone really, because, well, technically it's because the 200 is right underneath here. Yeah, it is within the trap zone, even though it's very close to not being. But even though price after 15 minutes here closes inside the trap zone, I would even go short here and then risk the stop here. And the reason why I would do this is because this red one is what's called a clearing elephant bar. And it's a clearing elephant bar plus because it's clearing so much data out in such a short time. So I would actually, in this case, go short on that one red bar. That means my short will start here and my stop will be right up here. I will remove this ring. So now I will measure how long this stop would be. This stop would actually be 143 points, well, a little bit more, 148 points long. And that's quite long. But this would be my entry right after this one closed. That means that I would open the trade at 4 o'clock exactly. And basically, when I see the prices already underneath the 20 moving average, the only thing I would be afraid of is if the price goes up and touches the 20 moving average and even goes further up and closes further up. But since it doesn't close anyway, it doesn't even go up there, there's no problem at all. So even though this is a very long stop, the clearing elephant bar is on my side. And also in this case, the long stop will be 150 point. In this case, what I would do then is I would simply trail down my stop until red gets taken over by green, which will be there. So how long would I then get? And this comes to the next point. In this case, I would have gotten 497 points in the Dow. I know this is an extreme day this Friday, but nevertheless, 500 points in the Dow is pretty goddamn good. The point I'm trying to make here is that if I do this entry of 140 point stop, you could say, well, then you need to have at least 1 to 2 or 1 to 3. But let's say, just for easy sake, I have 1 to 2. That basically means that after like 300 points, más o menos, I will just close the trade and say that's good. But that's my point, is to say that whatever targets you as a trader put up on a chart, it doesn't really matter, because the market doesn't care where you draw your target, and it doesn't care whether you want to have a risk reward for 1 to 3 or 1 to 2 or 1 to 10 or whatever. The market is going to give you what the market is going to give you. No more, no less. In this case, it would have given you 500 points before the first signal to take your money off the table, where you actually could add to the trade and get additional points on top of that. But just for the first signal, you could have got 500 points. Other times, you would perhaps get only, let's say, 100 points, 75 points, maybe 200 points. And you say, well, this is a very high risk if you compare to the reward. Well, the market gives you what the market's going to give you. As long as I have a quality signal that works about 75% of the time, I'm willing to risk for whatever I get. I get a clear here saying we cannot see the screen. Actually, when I look at my my studio, you should be able to see my screen. Strange. Hans, could it be you? I'll try to I'll try to write some text. Risk. Okay. I just wrote risk. Can anybody see this? I'll try to see if I can fix it up. Let me do it another way. Now you should be able to only see me. And now you should be able to see the screen where it says risk in the middle. It's actually what I'm seeing in the studio, so that should be it. So you can see me, you can see the screen now saying risk and everything is okay? Is everything okay? Because then we'll continue. We have 4 minutes before the market opens. So my point is just to make here is that the market is going to give you what the market is going to give you. Look at my other videos on YouTube on my views on risk reward. And it would make sense to you, and especially also when you apply this 1 bar stop rule, because in this case, as you can see, if I lose 1 bar here, fine, so it'd be 150 points. But if I win, in this case, 1, 2, 3, 4, 5, 6.5 bar, more or less, I will win, in this case, 500 points. And this is just, very simple technique, but it's actually very, very efficient. And the reason why I have no problem risking 143 points here is because it's such a good signal. It's a clearing elephant bar that takes out the 20 moving average, testing the previous high after consolidation area. So basically, this is a phase 3, and this is a phase 4 if you count the 5 phases in trading. Okay. Good. So now we've got to talk about the 1 bar stop rule, a little bit about risk rewards and targets. Of course, it's a good thing to have positive expectancy when it comes to targets. But at the end of the day, the market is going to give you what the market is going to give you. All right. I will now try and open my platform where I monitor the stocks that we're going to follow. Wait a second. My platform, for real-time platform, was giving me a hard time. There we go. And there we go. So today has been a crazy day. So far, the market hasn't opened, but since the Nikkei went down 12%, all the market has been going bonkers. So let's see how it opens now. There we go. You guys should be able to see my Pro Real-Time platform now. I have these 4 stocks. I have NVIDIA, I have Netflix, I have Microsoft and Meta. And I use these stocks because, well, maybe you cannot see the Meta so good because of my picture in the middle, but I'll try to make it clear for you guys. That should be fine here. So what we're looking for, if any kind of signal coming from these 4 stocks, because these 4 stocks are very volatile. So that means they move within a quite big span. And I'm just looking for, a clear signal. If there is no clear signal, I won't touch anything. I just want to have a clear signal. We have 1 minute now to start. Often what I do is, if I cannot find a clear signal on one of the 4 stocks, I will move to either NASDAQ or to the Dow Jones Index. Yeah. I have 3 screens. That's why I'm turning my head all the time. Because I'm opening the other charts as well on the other screen so I can monitor them as well. I do expect that the market should basically go up for a short while in the beginning, and then it's going to continue down, or else it's going to be the around. It just puts the nose down, and then it comes with quite amazing buy, because the market has, when the market opened, has fallen quite much. And I think that it should give some kind of, relief rally. The question is just when the rally is going to set in, if it's going to set in the start or later in the day. But we open in 5 seconds. Let's see how it goes. If you guys have any questions, you're welcome to write in the comment section, and I will try to answer your question as good as I can. Now you can see the market has opened, and the market has opened very much lower. Netflix opening down in 595 after closing around 614. Also an Nvidia opening in 92 after closing around 105. You have Microsoft opening all the way down in 388, and Meta opening down at 455. Wow, it's a lot of crazy drop. Yeah, let's see how it goes. I mean, the problem here is that they're opening so far away from the moving averages that you could say that this position from where they're open, you can question if this is a position one, or what it is, because it's very long away from the moving averages. Okay, now we are closing in with the first minute. I don't do anything at all until I see the first 2 minutes. I want to see how the candle produces and where they produce. So far, we don't have any clear bars yet. The Meta is producing a green bar, which basically looks like a tail bar. So the Meta could be a sell if the green gets taken out, even though there's a hell of a distance from the previous close price. There we go. Okay, so now the first 2 minutes has gone, and basically none of them has produced anything according to the rules that I have learned. Nvidia is probably forming maybe 2 tail bars. This could be interesting, but I need to see them close. Looks like Meta is building on a 3-bar play. It's interesting to see that right now the Dow Jones is actually sinking, falling, while the Nasdaq is trying to go upwards a little bit here. So now we have got 2 minutes plus the first minute of the second 2-minute period. That's how it is. Sometimes the things are not clear right in the opening, and sometimes they just give you a perfect elephant bar or something like that. And then you can just move on that, or a bear 180 or a bull 180, whatever happens. But I would presume that also the markets today could be a little bit hesitant about what's going to happen because of the big drop and the weak opening. Yeah. There's really nothing on the stocks immediately that I like. So maybe if I can drag in here the Nasdaq very quickly. Let me see if you guys can see that one. Here we go. Should be the Nasdaq now. Now I didn't get to enter the trade, but what I noticed is that after being underneath the 20 moving average, now the price is going to get squeezed in here, but it's actually found some kind of support on the 3-minute here, at least, sorry, on the 20 moving average, at least for a short while. The interesting part is that as long as it's above the 20 moving average, even though it's in a negative area, whether it can push through here and even push through the 200 moving average, because now you can see it's fighting the previous resistance from the latest 30 minutes. Since the tech has been really hammered, it would make sense that there will be some kind of bounce back. I mean, the Nvidia is down 12%, Meta is down almost 6%. And God for help it if you guys hold any cryptocurrencies. I can see Bitcoin down 18%. Ether is down 24.6%. Oh my God, I'm just happy I don't own any crypto on a day like this, because these are just extreme, really extreme. Yeah. Just checking the UX to see if anything particular happened. No. Let's see the 3-minute. It's actually only the Meta and the NVIDIA that looks a little bit interesting. I'm just looking at on the other panel right now to see if there's anything I could share with you guys. So you can see now actually the Nasdaq went and hit the 200 moving average on the 3-minute chart. So the interesting part is to see how price reacts to the 200 moving average here. If it respects it, if it goes underneath, or what it does turn around. We have to look at how it looks when the candle closes. And I'll be looking a little bit to the left side because I'm monitoring the Meta stock right now to see if it's going to give any signal here. Of course, it would be nice that we could have some kind of signal while we are live here, but the best signal was basically here in the opening, where I saw this one close here, because I could have drawn at least these two candles here. But we were looking at the stocks at that time, so it's a little bit hard to do. But let's see if we get a signal here. The Meta is still pushing. Yeah, the Meta and the NVIDIA, these two stocks was actually building quite a momentum since the opening. But these are also quite crazy circumstances. I mean, all these big stocks has opened down so far away from the closing price. Just looking for some red to appear on either NVIDIA or Meta, but it's waiting a little bit. Okay, so now we saw the Nasdaq to close above the 200 moving average. What I would like to see in this case for a reversal would be that the next bar would actually be a red bar that takes out completely this green bar we just saw, but I don't think it's going to happen. But that would be a signal for me to go short, at least for a short scalp. Let me see what the Dow Jones can produce. Maybe it can produce something. Yeah, let's actually go and see if we can see the Dow Jones here. I'll try and flip around so you guys can see it. There we go. Should be on screen now. Okay, so here we have the Dow Jones, which actually went down here in the opening, and then now producing a very long, powerful bar shooting up through the 20 moving average, touching into this previous resistance. So in this case, because this is a elephant bar, maybe not the best position because it's not born directly on the 20 moving average and it's in the negative area, but it's still interesting to see how this one unfolds. If there's going to be a red pause bar, and then there could be a 3-bar play, because then we're going to catch the second move. Yeah, this one closes in 2 minutes. It's actually retracing all the way back now. That's crazy. That's kind of crazy. I'm just flipping the charts a little bit around here, guys. Sorry. Let me see if I can flip them back. Sorry. Where did it go now? Hang on. There we go. Here we go. So now we're back at the Dow Jones. And the candle is closing in 25 seconds. So as you can see, this is a clear elephant bar. It looks like a small turn here after the initial move up here, then down. It's almost like a 50%. That means if you take, I'll do the Fibonacci because that's a little bit quicker. If I move the Fibonacci here, you can see it goes down to 61.8 and then it turns around. Basically, you could say that I should measure it from down here and it hits exactly on the 68.1. So this is often a weak return because it stops at 61. But let's see how this candle now actually closes this red candle here. What I don't like about this bar is that the how do you say, the spike on the top is even longer, is even here longer than the body of the green bar. Now it has basically done a bare 180, even though there's only 40 seconds. This candle is only 40 seconds old, so it's not really a valid one. Oh, we also got on the NASDAQ now, we got actually the price to pull back all the way underneath the 20 moving average. So let me flip around now because this is what I'm for. Here we go. There you go. So what I'm looking for now is that if green is not strong enough, I will be shorting down underneath this area here. Let's see if we can get a signal. I'm also monitoring the Dow at the same time. So if you see my flip my head a couple of times, it's because I'm watching both screens. Yeah. The funny thing about these two indices is that the Dow Jones can actually go down while the NASDAQ goes up and the other way around. But I know there's also this rotation in stocks, but it's just funny because, I mean, technically both indices is a part of the American stock system. So it's funny that they could be this different. Okay. I will flip back to the Dow Jones because I think the Dow Jones will be the best get. And this is, I'm sad I don't get a better signal on a day like this when I go live, but so it is. This one is a bare 180 because it's taking out the green one. At least if it closes the green one and it takes it out right on the 20 moving average, it closes in about 20 seconds. So for demonstration purpose, I would put in, if it's going to hold, one short. But I will have a, wait a second, a stop here. Well, of course, now it goes all the way up. Wait a second. Yeah, the red bar needed to close underneath the green bar here, which of course it didn't. It went all the way back. Okay. Yeah, I think it constitutes a long, yeah, it does actually. 53. Okay. Yeah, this elephant bar building up here is 1 minute old now. The thing is that in order for this to be an MA20 hold, the price should have shooted through the 20 moving average, go back and find, how you say, support on the 20 moving average. But this is not really shooting through. This is just like a small lump through. So I don't really calculate it as a big one. And it doesn't even look better there. And the 2 minute looks quite clear. Okay. It's interesting to see on the 2 minute, you can see that this area has been holding 1, 2, 3, 4, 5, 6 bars down here at this level around 38,534. So technically, you could say that this elephant bar is very legit, and we should actually go long from here because this red bar here has 45 seconds to remain, and it looks like it's going to be a resting pause bar continued by a green bar that should go up and hit at least this area up here. I'm not trying to predict where it goes. I'm just saying that if the red bar becomes a pause bar, it will be obvious that there should be a green bar that's going to shoot up through this area, maybe even all the way to the 200 moving average. 20 seconds to close. Let's see how it goes. Eight seconds to close. Okay, I will do my entry when this one closes, and I'll put my stop underneath this bar that I enter on, the previous bar. Here we go. So now, whoops. There we go. That's a little bit low. There we go. There, I just removed my stop, so it's underneath the green bar that I enter on. And here comes the interesting part, because you could say, well, what about your target and your expectation for this trade? Well, I'm going to get as much as the market is going to give me, no more, no less. But as I said, first of all, I do expect, if I did to expect anything, the price should go up and hit this area up here. And then secondly, even maybe all the way up to the 20 moving average. And almost for the eye to see, it looks like there should be a possible trend line lying somewhere around here, which happens to coincide with the 200 moving average up there. But the only thing I can do is to accept what the market is going to give me. Doesn't care if I do 1 or 2 or 3 or 5 or 10 bars, the market is going to give what it gives. So in this case, my exit will be if I get stopped out, first of all, or secondly, if the color changes from green to red. And the only part left for me now is actually to manage the trade. I don't know if it's going to win or going to lose. I have no idea. But in this case, I understand that I'm in a negative territory. I'm underneath the 200 moving average, but at the same time, I'm on the positive side on the 20 moving average. And as you can see, the 20 moving average is sort of kind of pointing a little bit upwards towards the 200. So I at least expect it to go up, as I told you, and hit this area up here where the line is right now. And it hit it right now. So the first part is now gone. Good. So that means that basically now I could actually close the trade and say thank you very much, because I kind of got what I expected from this, even though I didn't expect anything. The market is going to give me what it gives me. But this is what I would visually expect to say, well, this would be an obvious thing that the market goes to this area. But the only thing now left for me to do is to manage the trade. And the best way for me to manage this trade is actually to just move my stop loss to either the nearest elephant bar or just to the nearest green bar in this case. So that means if the nearest green bar that the stop is going to be taken out, I'm going to be exiting the trade. So that means in this case, I will take my stop here and move it right underneath the green bar that's working right now. And in my chart software, do you want to amend your trade? I say yes. Here we go. So now the stop has been moved. Oh, it looked like this stalled a little bit. Wait a second. I can hear my computer is getting a hard time from running all these things at the same time. I don't know if you can see. I hope you can see the chart because my computer is giving me a hard time. Okay, now you saw here, which is very often actually, that price do get some kind of resistance whenever it hits a round number. Look, 38,800. This is very obvious to get a resistance when you meet a round number. So that could actually be my second target, to say the round number. Yeah, actually I should have taken that as the target because I can see now it's bouncing a little bit down. Let's see if it can move the nose up there again. At least what I can do now is move my stop up here underneath this one. But technically, I'm still have my stop on behind the last green bar, which is in this case the best thing to do, I think, in the long run. Because when you have the stop here, you also give the stock, how do you say, a little bit of room to maneuver in. But of course, there's some kind of, how do you say, resistance here around the round number. You see, as soon as it went up, it immediately got kicked down again, very easily, 25 points down. I don't really like that it get kicked down this easily. I'll have a sip of water. If there's any question, guys, just let me know in the comment section in the chat. I will answer them. Yeah, that was unfortunately easy to see that the round number should be the first block. I'm a little bit sad that I didn't get to react on the second bar because I can see that this tail up here is, sorry, this spike up here is quite long, and this indicates that the sellers are definitely coming in. And you can see, yeah, now it goes down and stops me out. I was a little bit sad because I could have got a little bit more if I was a bit quicker. Actually, now I only got 23 points I could see. Yeah, that was sad because I was actually up 100 points I could see. So I got 23 points. But the point here is that I took the signal, the elephant bar, that kind of went all the way back. And then we get to the first point of resistance and a little bit more of that. So the point I'm trying to say is that when we talked about these risk reward and these trading, that my stop was underneath the green bar that I entered. And in this case, I entered on the green bar, and there was two more green bars where I should have taken my money. In this case, I got stopped out on the first red one. So I only got one green bar. But for every time you trade, sometimes you get 1 bar, 2 bar, 3 bar, 5 bars, 7 bars, 10 bars. It differs, it varies, and in this case, it was just 1 bar, but still it was a plus. And the point I'm trying to say here is that what matters the most really is that you try to focus as much on getting a quality signal, a quality entry. Because if you get a quality entry where there's a high probability that the trade is going to go your way, it doesn't really matter in the long run how many points you get. Because let's do the math. Let's say that you win on 75% of your trades because you are, let's say you're entering on only elephant bars on top of the 20 moving average in a positive direction over 200 moving average. Okay, this have about 75% accuracy rate. So regardless of your win 1 or 2 or 3 bar every single time, that means that 7.5 out of 10 times you're going to win, and only 2.5 times out of 10 you're going to lose. That's why when you have the 1 bar stop rule, you already know that out of 10 trades you're going to lose 2.5 bar. But when you're winning, the 7.5 bars at least, if not more. And that's why that if you want to, move into a profitable area as a trader, that it's very important that you put this very strict discipline in your trading that helps you to keep your trading plan, keep your promises to yourself, follow your trading plan, that gives you the consistency and have a quality setup, a quality signal that I just mentioned. That means that it doesn't really matter whether you get um, 23 points like I got today, because maybe tomorrow I will get 115 because then I closed the trade correctly as I should today. Or next time you'll get 300 points. The only difference here is that is how long time is it going to take before you make XX amount of money. Don't tell me that it's important that you should catch every single move from the start to the finish. It's also important to catch the top and the bottom every time. But the important thing here is actually to have a consistency in what you're doing. And of course, to fine tune and improve your execution all the time. Because if you do that, the money will eventually take care of themselves. Because if you win 7 out of 10 trades, like we talked about, that means that it would only be a matter of time before your account is going to grow. And the way you can make your account grow is using the compound interest rule. That means that for every time let's say we talk about CFDs when we're talking about TD365. If I start with 1 CFD, and the next level I start with 1.1 CFD, 1.2 CFD, 1.3 CFD, all the way up to 2, all the way up to 3, 4, 5, 7, 10, 20, 100. That means that it will be a matter of time before I can trade 100 CFDs per time, or 200 or 500 CFDs per time. Sorry, per trade. So the question here is, do I as a trader have the patience to wait for that or not? And the problem is, in this society, when we are, with so much instant gratification, we are almost trained not to have this patience of waiting. And as one of my favorite that I follow called Randy Howell from Trader State of Mind, you can find him here on YouTube. He says, you have to be like the American cougar. You have to be able to sit up in a tree, wait for the right opportunity to appear. And when the right opportunity appears, you jump from a tree and you get your prey, and then you go back and wait in the tree. So the same thing here, that if you instill this mentality, you will strike whenever, only as I said, you get a quality signal. That's when you strike. That's when the cougar jumps from the tree. But when the cougar jumps from the tree and hits the prey, the small deer down underneath the tree, if it doesn't break the neck or kill it completely, it's going to run away. It maybe only gets the leg or something like that, and it runs away. And the same thing with the trading. When I enter a trade now, when I see the opportunity, I don't know how much I'm going to get. The market is going to tell me how much I'm going to get. But the most important thing is that if I'm sitting in the tree like the cougar, that I actually jump on the exact moment when the deer is standing right underneath the tree. And in this case, on the exact moment when the chart shows me the best quality setup, or as close to a quality setup can get. I mean, this setup that I just entered here was not the best quality, but it was okay. It was good enough. You can see now the price is just going bonkers while we talk, hitting the 20 moving average for support and just going crazy. There must be some numbers out that I just missed. Let me see. Wow, that was crazy. We have the ISM services numbers coming out. And since these are positive, the market reacts with joy. Wow, You see, now actually while we were talking, the market just shoots up in 33 seconds and actually does hit exactly what I said in the beginning, the 200 moving average. This is a 265 point climb in 40 seconds. I mean, there's no way I could predict this. But at least what I liked here to see was that the price actually found some kind of support on the 20 moving average. So yeah, so it is. Wow, that was crazy. But you see, let's say that now I was a little bit busy talking to you guys, but let's say I say, okay, if the price finds support on the 20 moving average, which I was be looking for, and price takes out one or two of the red bars here, it will be a plausible entry. So I could enter here around 38,705 and put my stop down here about 38,643. That would be a very plausible stop. And in this case, as you can see, in a matter of 1 minute and 36 seconds, it would definitely pay off, at least if I was able to take my money and run very quickly. Because, I mean, this one can basically go down the next 2 minutes. I think this is an overreaction after the market has been fighting so much. So, but yeah, that of course was a possibility. And also what you can see here, the reason why that I could have entered this trade. Now I was too busy talking to you guys, I'm sorry. But if you look at the move, this is the bottom of the first move, and this is the top where I should have gone out. Unfortunately, I got out when I got stopped out. But if you measured here, you can see that it's more or less exactly at the 50% level. That means push up, retracement, push up. So when the market retraces about 50% of the move, that's when you need to be aware. But of course, I have no chance to predict the market is going to shoot up 200 points in less than 20 seconds. But in case that I wasn't talking to you guys, maybe I would have caught this one as well. All right. I've seen no questions, but at least we got to do one trade. We only closed 23 points. It's not that much, but it's better than nothing. I want to say thank you for you guys for watching by. I want to ask you to like or subscribe if you haven't done that already, and you're welcome to watch some of my other videos, including the other live videos, even the ones where I actually show that I lose, because not many people in YouTube shows actually videos where they're losing money, or yet live videos like I'm doing now where I did the trade live. And just for the record, I will just take a very quick shot here from my screen. A screenshot. Let me see if I can do that. Ah, wait a second, guys. Here we go. And let me see if I can share it for you guys so everything is in order. There you go. As you can see, I entered the trade just with one CFD, as I showed you, at 38,679, and I closed it at 30,702. And the trade was open at 15:48 and was closed at 15:53. The reason why I emphasize this is because these are the London time. This is not the US time, so that's why the timestamp is different. Unfortunately, so is it because of the broker. He uses the London time in the stamp, but nevertheless, this is the trade that we saw. There we go. There we go. So what I was encouraging you guys is to also go and see the other live videos, because there's live videos where I both lose, but also where I win. And this is a part of the game. Everybody loses and wins. I just would love to see other educators on YouTube actually showing videos live where they trade live. Even the guys who say, oh, we have signal for this and signal for that. Nothing about, no, let's go to my Telegram group or WhatsApp group, blah, 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 blah. No, go to YouTube, broadcast live, show what you got, show how you manage your losing trade. Because one of my biggest inspiration, Oliver Velez, he says, well, I don't want to see your winnings. I want to see your losers. I want to see how you manage 100 trades. I want to see how you manage your losers, because I have learned that this is actually where you really get the information from. And of today's technology, it's very easy to show, a screenshot from a phone of a MT4 server showing you did so many trades in the currency pairs that you won, and then it's really a fake server or it's a double server, all these things. I don't even know half of it, but I know that this is very easy to manipulate. But it's a little bit harder when you do a live video where you show a live account to see what's actually going on. So I really hope that you guys take into consideration that if anybody should teach you anything, just ask them, show me how what you do live, because this is best credibility. Unfortunately, there's a lot of people out there who's trying to make money of young people being very lazy today and just want to have a signal on the phone and say, oh, I can make 100,000 or 20,000 just by copying some signal on the phone and everything is fine. I mean, it's like the normal thinking has kind of disappeared nowadays, that people just say, okay, let's just do it quickly. But the thing with day trading is there is no quick fix when it comes to day trading. But you can, if you really like it as a professional business, which it is, you can actually improve yourself step by step by learning. I have used 16 years of trying to teach myself. And you can also take a mentor like me and say, okay, if you contact a person like me, you have the ability to say, well, at least I'm going to skip all your 16 years or 14 years or 10 years of failures that you have done, or the learning you have done. I could admit, say, easily in 2000 and was it 2012? Yeah, 2012. I lost a hell of a money on the Danish windmill company Vestas, because at that time I didn't know what I was doing. But I'm honest about it. I'm not trying to make any story here and saying, oh, I made my first million there and that's why I'm buying a Lamborghini or something like that. On the contrary, I'm saying I lost some money at that time because I didn't know what I was doing. So, but now, since I do know what I'm doing because somebody else has taught me what to do and to do it correctly, that leaves me that I still have to fight with this thing that makes most of us struggle a lot when it comes to day trading, which is the mind. That's why now, if I got my charting correct, I got my signals correct. As I showed you, my positions, my signal, the elephant bar, the 3 bar play, the bear 180, bull 180, the tail bars, whatever, and the position right. That means that the only thing I need to struggle from there is basically the trading psychology, the mindset. But this is by far, I'm sure you could say, 80 or 90% of the biggest fight for traders is the trading psychology, the trading mindset, that they simply hasn't got the mindset in track. And then it doesn't mean how good a technique they have. There's many trading techniques. There's a moving crossover, the 200 from the 50 from the 200, and there's ICT trading, and there's lots of tradings. But at the end of the day, you can watch my video, you can watch 100 videos. If you don't work on your mind and if you don't work on your improvement, you're never going to make it. I'm sorry, I have to say. I know this is not what a lot of people want to hear. They'd say, oh, I want to hear that I can do this in 1 month and then I'll be a master. But it's like, okay, I want to play golf for 1 month and then I want to be a master at golfing or boxing or whatever. That's not how it works. But the thing is, if you focus on the process of getting better at your skills, like if you were playing the PlayStation FIFA, when you play PlayStation FIFA, you're playing to be a better team and to go to the World Cup final. You don't care about if you win some money or not. You're just trying the best to improve how you press the buttons, and if you do a scissor kick or what a bicycle kick, whatever is done, and do a header at the right time, and thereby improving so you be such a good player in FIFA that you can go to the World Cup final. And it's actually the same thing that you need to apply in the trading, that you actually improve your trading so you don't really focus on the profit and the loss. But you could say that your day of success should be counted on whether you did the right thing or not. So you could have even done the wrong thing and still made money on a day because you were lucky. But you can also, in this case, you can go the other way around, but you're actually doing all the right things and still you lose money. Like I showed you taking the entry on the elephant bar, and then in 75% of the cases, there's going to be more green. But in this case, the 25% is going to give you red, and therefore it knocks you out. So accepting that fact that it is a random outcome, that's the first thing. Not trying to predict anything, not predict any outcome at all. That's the second thing. And be cool with that and relaxed about that and say, okay, I'm not going to try to predict the outcome of this trade because I cannot. It's going to be different. And as you saw, now there was some news here at 4 o'clock that made the Dow Jones just shoot up. I had no idea of knowing how the reaction was going to be. If it was bad numbers, the reaction could be that the Dow Jones would have fallen 200 points. There's no way for me to know. That's why my executing of my trading plan is the most important thing for me as a trader to do, and to improve my skills and to work on my mindset, and every single week actually improve my skills step by step by step by step, exactly like you would do when you play the FIFA game and you say, wow, this time I came to the semifinals. Wow, maybe next time if I play for one more month, I will actually go to the finals. So that is basically the same, but it takes a lot of work. It takes a lot of how to say, improvement of your skills, and unfortunately, a lot of people don't really have that. There was a famous guy, I don't remember his name, but he said once, even if I printed my winning day trading formula in the Wall Street Journal, 90% of the people who read the newspaper wouldn't be able to win at least money anyhow. And it's simply because he recognizes that the psychology and the psychology that we have as human beings is not really fitted to this trading. And therefore we need to, how do you say, to reprogram how we think about it in order to succeed. So that's basically the difference. I wish there was more people watching this, because I think this is very valuable information if you are in the day trading endeavors. But I want to say thank you for the people who actually did take the time to look at this video. I can see an hour has gone now. So I will say thank you very much for watching. Like and subscribe, and put some comments down below if you want to do that. And please go enjoy some of my other videos, maybe in another day. There's very good stuff on my channel, from more live day trades. There's also the shorts videos where you can get quick information about how to approach day trading. And if you want to, on my channel, you can also use the info to contact me, or through Facebook if you want to. Thank you very much for watching, and have a good trading. Bye bye.